Hey guys, what's going on? To make a casual video this Saturday afternoon, just going through my current thoughts on crypto at the moment. With the crazy run up with Bitcoin, it's probably like a very pivotal point for crypto. We either have a significant retracement from these previous all-time high retests, or we potentially see a move that breaks the all-time high, and we see some of these altcoins that have been in sort of fairly, especially the coins from 2016, 2017, a lot of them are only just breaking all-time lows. You might see these have some of the biggest runs ever. It all, of course, is dependent on Bitcoin. Actually, one of the things that I recently signed up for and I wanted to share with you guys is, if you're looking for something that involves or helps you out with trading, Tradingview is one of the tools that I use for charting. It's probably the standard for most charting. It's really good for crypto, works for equities, commodities, and pretty much, yeah, forex, any real exchange, to be honest. So they've got a Black Friday 60% sale at the moment, and you also get 1 free month. I've been waiting for probably half a year for this offer. I know it's pretty last minute, but yeah, there's 5 hours left. So if you haven't jumped on, or you're considering getting the Black Friday special, I'd highly recommend it. I personally chose a premium, which gives you unlimited alerts. So you've got, when price crosses a certain price, you can set up server-side alerts. With the higher plans, you get unlimited alerts, whereas I guess as you tier down, you'll find that you get fewer alerts and also fewer features, more overlaying indicators, more devices that you can use at the same time, that sort of thing. It's pretty handy. Let's talk through Bitcoin price firstly. Actually, I think that would be a good starting point. So one of the content creators on YouTube that I'm really enjoying at the moment is Benjamin Cohen. He talks a lot about logarithmic regression and where we can sort of expect, this cycle, where we can see Bitcoin going, and also has a pretty pragmatic approach of sort of dollar cost averaging out as price gets into overbought territory, and then also dollar cost averaging in when it reaches certain oversold territory. This is his take, and I'll just play a short video of his take of the recent price action leading up to the pullback just before all-time highs.
Seem like it's too crazy when you're comparing it to, say, this chart over here. But one of the things that I think can be useful from time to time, we primarily look at things on a logarithmic scale, which I think makes the most sense most of the time. However, there are some times where it's nice to take a step back and see what does it look like on a linear scale. So let's do that. This is how this looks on a linear scale. So I just want you guys to kind of look at that for a second, right? Just take a look at it and, kind of set yourself apart from what we want to happen, right? What we feel like has to happen, or, just any other thoughts. Like, just look at it from a practical perspective. And
so I'll just stop it there. He's talking about this linear versus logarithmic view. If you've used Tradingview before, one factors in, I guess, changes over the long run, whereas the other one will show, will give you a better idea of how overbought and how far we've gone above the trend line, especially as we reach all-time highs. So this graph really shows how big of a spike and how potentially big a pullback is going to be after the move from 3,700 all the way up to 19,500, with about 3.5 times what the price was back then. So I thought that was pretty interesting, and I thought I'd share that with you guys. In terms of where price is going now, I'd say so starting off with on the higher time frames on the weekly, you can see that I've marked out this area here between 16 and 15.2k as an area of support on the weekly. If you if we zoom in a little bit closer, you can see that this blue line here is the second highest close on the monthly, on the weekly, and price has dipped down on this, and we're in this range, right? So we're in between 17,400 and 16,400 on the daily time frame, and I expect price to either retest this this area of resistance, so potentially going up to, if I bring out the Fibonacci points, so say you bring out the Fibonacci points here, you can probably expect it to go back to this 0.382 area, which is about 17,400, which is the range high. And if it closes above or starts reaching for, it starts grinding its way back up to 18,200, there's a good chance that there's a little bit more upside, and that will give us a chance for higher shorts up. So that's going to be pretty interesting. The way I'm playing this is, if there's any sort of significant bounce, I'll be looking to potentially open a small margin short. So, but yeah, I wouldn't really recommend playing this out. It probably makes sense to be in stable coins at the moment. A lot of people are expecting a drop down to, say, like around the 14 or 13,000 area. So if I bring this chart back up, so most people are sort of expecting a pullback to potentially the first point of interest is 14,000, give or take, and then some people are calling 12, even as low as 12,000. So that's going to be interesting. I think anything below 12,000 and we're probably going to potentially see 4 digits or worse, and that's probably the end for this cycle. But we'll see how that plays out. There's one other thing I want to show you guys. So if you've seen my chart here, you'll notice that I've got this I've got 3 moving averages here with a cloud in between. So essentially the top one here is a 21 day moving average. You've got the 89 day moving average, and then you've got the 200 day moving average. So this is really good. If you look at where this has historically, or where this has sort of played out since the March crash, which I consider a deviation, you can see that for the most part on the daily, Bitcoin's price has bounced off this 21 day moving average for the most part, sometimes coming down to test the 89, but for the most part it's in a strong trending environment. 21 moving average tends to be provides good support for price action. In this case here, if you're looking to buy a significant dip, we could potentially, the last line of support you're looking at is around $12,000. However, that's probably the last area bulls will come in. They generally will step in a lot earlier, especially if people are particularly bullish this cycle. So we'll see how that plays out. So if you're interested in getting this cloud, I think it's really good. So if you look up, actually borrowed this from Ted Kleps. So I'll just bring his thing up here. So if you look up Teddy Kleps and you just follow him on Twitter, he's got some really interesting stuff. But specifically, if you're on Tradingview, you can go into this chart. You can go into this pinned tweet, click on the Super EMA cloud, which he's provided a script that you can download and apply to your Tradingview. So go into here. It'll normally have add to favorite scripts here instead of remove. Click on that one, and then when you're back in the charts here, you can go into your indicators and then go into my scripts. You just go into your built-in, and then you type in secret EMA cloud, and it will come up here. Click on that, and then it'll pop up here, and you can turn it on and off. So that's a really good indicator, and you can see like it works quite well for altcoins. You can see this entire time the 21-day moving average was acting as resistance until it broke this 200-day moving average just this month. So that's Bitcoin. A little bit about the cloud. I've covered where I think price action can potentially go to. So I think, if you're expecting a retracement, the first logical area is probably around 14,500. If you're looking for a short, potentially that 17,500 area could be an area you could look at. So what I want to go through now is actually I guess in terms of altcoins where I'm actually looking. So I think, or I expect DeFi coins to do well once Bitcoin puts in a bottom. The reason for this is we saw after the huge sell-off the other day that Bitcoin, altcoins or DeFi altcoins saw like a pretty significant bounce. So my strategy is to set alarms for specific blue chip DeFi coins. So for example, you got Uniswap, you got Wi-Fi or Yiffy, depending on how you pronounce it. You've got coins like Sushi. I think RSR is probably one of my favorites as a long-term potential hold. Then you have other coins like Aave, Band, Compound, and that sort of thing. So pretty much those coins. I'd also look at the Coinbase coins that are under $1, as when the market heats up again, almost certainly you'll see retail flock in and buy those cheap coins. So you should see pretty significant gains for that. But when I say I'm looking at DeFi coins, I'm setting alarms and I'm buying in, buying very small amounts and then setting bigger bids for lower down. Not expecting to get filled, but if I do get filled, then that's ideal. So generally speaking, if you've got filled for all your orders, you probably have bought a little bit too high when it comes to a lot of the altcoins, as a general rule. So that's just how I sort of ladder my buys and increase size as price drops down further. But this only applies to coins which I consider as blue chips, and I'm happy to hold for the next cycle. So what I've got on my watch list is Kyber Network. I've got Civic, which I think looks pretty good from a chart standpoint. You can see that it's potentially flipping this 20-day moving average as resistance, but we'll see if this ends up being resistance or whether we're able to bounce from here. Otherwise, I would expect a pullback, and you could start looking for buys around the red point. So here it'd be about 4.1 cents US. So there's that. Another thing I want to show you guys is how to use Bitcoin funding or funding rate to know whether there's more people on derivatives or futures markets that are longing Bitcoin as opposed to shorting Bitcoin. So as a general rule of thumb, if there's a lot of if funding is really high positive, that means most people are longing, and therefore longs are paying shorts. So in this case here, if you see too many days in a row where funding is positive and it's quite high, there's a good chance that the people in longs are going to get liquidated as we drop down further, and then the opposite is true. So if you see that there's a few too many negative funding days, that could potentially be an indicator to start looking to dollar cost average in, as price is probably going to potentially turn around. There'll be a short squeeze, and then you'll see a lot of the late shorters get liquidated. So if you want to have this this indicator, if you look up indicators, you just type in the BitMEX funding, and then click on BitMEX funding here. Bring that up. I changed the settings a little bit, so I actually had my friend Dylan help me out with this. So big shout out to him for his help with this indicator. It's honestly, this is some alpha here. So if you're looking to look for more confluence and an extra indicator to know whether your buy should be long or short, whether you expect price to go up or down over the longer trend, use this indicator, add it to your indicators that you use. If you're not ready to set it up, click hide March 12 premium deviation. That just gets rid of the big drop in March, and then also turn on the show horizontal line, which gives you the up and lower boundaries for this price. So that's the BitMEX funding. Otherwise, in terms of what I'm holding as potential, and adding to some of the large cap coins, so Ethereum, Litecoin, I'm pretty much buying dollar cost averaging in, but I've slowed that down, and then Ripple, which has had a massive run. So yeah, Bitcoin, Ethereum, Litecoin, what else? Wi-Fi, and the other one is Link, which I think could potentially go down to 9 US. So let's quickly bring that one up. Yeah, so I think there's a potential for Link to go down to 200-day moving average, which places it at $9.80. I've got this midway point here at $10.80. So if it reaches this point, that's where I will start looking for areas to dollar cost average in, but with probably a little bit more volume. So that's some areas there. What else can I talk about? I think I'll probably end it at that. Just to recap, guys, I recently purchased Premium. This is if you're seriously looking to get into trading, and you want some charts with alerts, this is by far one of the best tools. You can have multiple watch lists, and you can sort by color, and yeah, there's a lot. It's a pretty powerful charting tool that will improve your charting. Now the plans are, even with the discounts there, they are pretty expensive in a way. However, if you are looking, if you're not ready to purchase it, they do offer 30-day trials, so that's the other thing you can do. I'll put a link into the description which you guys can use. It's an affiliate link which gives you $30 credit for when you sign up and you pay for the first month. It also gives me a $30 credit, so it's a pretty good incentive like that. But the main thing is, even if you don't use my affiliate link, I highly recommend jumping on this 60% off discount. This only happens, and this is their biggest discount that they do on a Black Friday. And go through the different plans, find out which ones you think make sense for you. I think for the most part, if you get on the I'm on the Premium, which is the highest plan, but if you get on the Pro plan, that's also a really good one. It just means that you've got less devices, less alarms, less indicators, but you still get, which it might still be enough if you're not really trading that much, but you want to start learning the indicators and you want a bit more of the premium functions. All right, guys, I'm going to finish it up there. Hopefully you guys got something out of this. And I'll catch you guys on the next one. Have a good afternoon and weekend. See you guys. Also, don't forget to press the buttons, likes, subscribe if you're new to the channel, and I'll catch you guys on the next one. Peace.